What is happening, crypto adventurers? Get ready to dive headfirst into the whirlwind of the digital asset world because the news cycle is absolutely exploding right now and you are getting the unmissable updates first. We've got seismic shifts happening and we're breaking it all down. Stick around and let's get into it. First up, we're asking the million-dollar question. Is Bitcoin's legendary bull run still on solid ground, or are we seeing signs of a shift? We're diving deep into the charts and the sentiment to bring you the clarity you need to navigate these choppy waters. Then, we're shifting gears to explore Bitcoin's current consolidation phase. For the long-term investors out there, this is crucial. What tactical entry strategies are emerging, and how can you position yourself for maximum gains when the market inevitably breaks out? And you won't believe this. Kraken is making a massive move, acquiring Breakout to supercharge leveraged Bitcoin trading for funded accounts. Plus, a 13-year-old Bitcoin wallet just woke up and moved a staggering $53 million. What does this seismic activity mean for the market? You need to know. Make sure you hit that like button, subscribe, and ring that notification bell so you never miss a beat. The bull run's true pulse. Is Bitcoin's momentum unstoppable? Are we witnessing the sustained power of a historic rally, or are the underlying currents signaling a change? This is the question on everyone's mind as we analyze the latest indicators for Bitcoin. The cryptocurrency market is in a perpetual state of flux, and understanding the health of Bitcoin's current bull run is paramount for any investor. Recent price action has shown periods of both significant upward momentum and concerning consolidation, leading to widespread speculation about the sustainability of its upward trajectory. Analysts are closely monitoring key metrics, including trading volumes, on-chain data, and macroeconomic influences, to gauge whether the bulls are still firmly in control or if a correction is on the horizon. The narrative surrounding Bitcoin has often been one of cycles, and discerning where we are in the current cycle is critical for strategic decision-making. Is this a temporary pause before the next leg up, or are we entering a more prolonged period of sideways movement that requires a recalibrated approach? The sheer volatility inherent in digital assets means that even minor shifts can have significant implications for market sentiment and investor confidence. We are seeing a complex interplay of factors, from regulatory developments to technological advancements, all contributing to the intricate tapestry of Bitcoin's market dynamics. The resilience displayed by Bitcoin in the face of global economic uncertainties has been remarkable, yet the potential for unforeseen events to disrupt even the strongest trends remains a constant consideration. The debate is fierce, with some pointing to robust fundamentals and growing institutional adoption as undeniable signs of strength, while others highlight historical patterns and emerging headwinds as reasons for caution. Ultimately, the true pulse of the bull run will be revealed through continued price action and the market's reaction to evolving conditions. Market participants are keenly debating whether current market conditions represent a healthy pause or a precursor to a downturn, with sentiment swinging wildly. But don't go anywhere, because the story is far from over. Next, we're dissecting Bitcoin's strategic consolidation and how you can capitalize on it. Strategic entry: mastering Bitcoin's consolidation for long-term gains. Is Bitcoin pausing for a breath, or is this a calculated setup for its next major move? We're uncovering the tactical plays for savvy investors. Bitcoin is currently navigating a critical consolidation phase, a period characterized by sideways price movement after significant rallies. For long-term investors, these phases are not signs of weakness, but rather opportune moments to refine entry strategies and build positions. Consolidation typically occurs when buying and selling pressures reach a temporary equilibrium, allowing the market to digest recent gains and establish a new base. This period is crucial for identifying potential support and resistance levels, which can inform future trading decisions. Investors are advised to look for patterns within the consolidation range, such as the formation of ascending or descending triangles or classic flag and pennant formations, which can often precede a breakout. The key is patience and discipline. Attempting to time the exact bottom of a consolidation phase is notoriously difficult, and often leads to missed opportunities or premature entries. Instead, a more effective approach involves dollar-cost averaging into positions as Bitcoin approaches support levels within the consolidation range, or waiting for a confirmed breakout above resistance with increased volume. Fundamental analysis remains vital during these quieter periods. Investors should continue to monitor developments in Bitcoin's ecosystem, such as advancements in Layer 2 solutions, regulatory clarity, and the ongoing adoption by institutional players. The halving event, a programmed reduction in the rate at which new Bitcoins are created, also continues to be a significant long-term bullish catalyst that investors should consider. Furthermore, understanding the broader macroeconomic environment, including inflation rates, interest rate policies, and geopolitical stability, is essential, as these factors can influence investor sentiment towards risk assets like Bitcoin. By employing tactical entry strategies during consolidation, long-term investors can position themselves to benefit from the inevitable upward movements that follow these periods of price discovery, effectively enhancing their potential for significant returns over time. This phase presents a unique window for strategic accumulation, with experts advising a patient, data-driven approach to maximize long-term potential. But the strategic plays don't stop there. Get ready for a massive acquisition that's set to shake up the trading landscape. Kraken's bold acquisition, supercharging leveraged Bitcoin trading. Kraken just made a game-changing move, snapping up a key player to unlock massive trading potential. In a significant development for the cryptocurrency exchange landscape, US-based Kraken has announced the acquisition of Breakout, a proprietary trading platform designed to empower advanced traders. This strategic move signals Kraken's intent to expand its service offerings and cater to a more sophisticated user base, particularly in the lead-up to its anticipated public listing. Breakout's core functionality allows eligible users to access substantial notional capital, reportedly up to $200,000, and crucially, to retain a significant portion of their profits, with the potential for up to 90%. This profit-sharing model is designed to reward demonstrated trading skill and success, aligning with Kraken's stated goal of building systems that reward performance over pedigree. The platform also incentivizes top traders through rewards for making large trades, fostering a competitive and performance-driven environment. Breakout offers leveraged trading on Bitcoin, BTC, and Ether ETH contracts, with leverage ratios of up to 5x. However, access to this capital and leverage is not unfettered. Traders must successfully pass an evaluation process and adhere to drawdown thresholds, subject to retests, ensuring risk management is a key component. Kraken's objective with this integration, expected within its Kraken Pro platform, is to provide an innovative, performance-based product that enables successful traders to deploy capital at scale within the crypto markets. This acquisition follows Kraken's recent expansion into stock and exchange-traded fund, ETF, trading in select U.S. states, and its substantial $1.5 billion acquisition of futures trading platform NinjaTrader earlier this year. These moves underscore Kraken's ambitious growth strategy as it prepares for a potential IPO, possibly as early as 2026, which would make it the second U.S. crypto exchange to go public after Coinbase. The timing of these aggressive expansion efforts also coincides with a more favorable regulatory climate for digital assets in the United States, evidenced by recent dismissals of enforcement actions against crypto firms by the SEC. Kraken's co-CEO Arjun Sethi emphasized that the acquisition of Breakout aligns with modern capital platform functionalities, enabling traders to earn their way into significant capital deployment with minimal friction and on merit. This acquisition is poised to redefine access to capital for elite traders, potentially attracting a new wave of sophisticated participants to the platform. But that's not all the market-moving news today. Get ready for a jaw-dropping revelation from a wallet dormant for over a decade. 13-year dormant Bitcoin wallet awakens, $53 million unleashed. A wallet silent for over a decade has just made a colossal move, sending shockwaves through the market. What does it mean? The cryptocurrency landscape was recently electrified by the reactivation of a Bitcoin wallet that had lain dormant for an astonishing 13 years. This wallet, which had been untouched since the early days of Bitcoin's existence, suddenly moved approximately $53 million worth of BTC. This event is significant not only for the sheer volume of Bitcoin transacted, but also for the implications it carries regarding long-dormant assets re-entering the market. Such movements from old wallets can often spark speculation about the original owner's intentions, whether it's distribution, reallocation, or a strategic move influenced by current market conditions. This reactivation occurs against a backdrop of dynamic institutional activity, particularly the performance of U.S. spot Bitcoin ETFs. Despite a recent monthly net outflow of $749.2 million across these ETFs, BlackRock's iShares Bitcoin Trust ETF, IBIT, continued to attract substantial inflows, reportedly $706.9 million. This highlights a complex rotation of capital, with investors shifting funds between different ETF products and potentially rebalancing portfolios. The growth of ETFs like IBIT, which has amassed an impressive $86 billion and holds a significant percentage of Bitcoin's total supply, underscores the increasing institutional integration into the Bitcoin market. This institutional adoption has profoundly impacted Bitcoin's liquidity and price discovery, with ETFs now accounting for the majority of price formation during U.S. trading hours. The $53 million transfer from the Dormant wallet also coincides with increased on-chain activity, driven by both ETF flows and the general movement of digital assets. This heightened activity reflects a more robust and liquid market, where capital is circulating more freely. Analysts are considering various interpretations of this dormant wallet's reemergence. Given the recent outperformance of Ethereum, potentially fueled by ETF inflows and institutional treasury allocations, some speculate that this Bitcoin movement could represent a strategic reallocation of capital rather than a bearish signal. The interplay between Bitcoin and Ethereum, as the two leading cryptocurrencies, is a key area of focus for investors seeking to understand broader market trends. The re-entry of this long-dormant wallet serves as a potent reminder of the vast amount of Bitcoin held in older wallets and the potential market impact when these assets are mobilized, underscoring the evolving and increasingly sophisticated nature of the digital asset ecosystem. This unexpected transaction from a relic of Bitcoin's past is fueling discussions about strategic capital shifts and the ever-present potential for market-moving events from old guard holders. And that's a wrap on today's top stories. But before you go, let's hit you with a super quick recap. And that's a wrap on today's explosive crypto news. We've seen Bitcoin's bull run put to the test, explored smart entry strategies during consolidation, witnessed Kraken's massive acquisition to boost leverage trading, and seen a 13-year-old wallet move $53 million. What a day! Don't miss out on any of these critical updates. Hit that like button, smash subscribe, ring the notification bell, drop a comment below with your thoughts, and follow us on all social platforms so you're always in the know. We'll see you in the next one.